Good afternoon, folks. Thanks for tuning in to our MMG weekly recap. So, this is one of our social media featured charts at Mortgage Market Guide, and this is the Fed funds rate. So, you could see back 2018 through 2020, we go to zero, and you could just see the pace at which they've elevated the Fed funds rate. And so, the Fed raised rates this week, 50 basis points. Still talking tough. Um, at least they had mentioned that there's going to be maybe a lag effect, meaning that probably have to slow down a bit and allow all these second half of the year rate hikes set into the economy. But right now, it feels like us at MMG we are looking beyond inflation. The good news amidst all this uncertainty is that long term rates in our eyes have peaked, and inflation has also peaked. And what the real threat is now, and clearly the stock market is telling us this, is that the Fed is going to keep this higher for longer narrative too long and put us into a recession. When we came into this year, into 22, we said, it had shades of 2018. Fed can be very hawkish, desire to hike rates aggressively, shrink the balance sheet, yada, yada. In December of 18, they hiked rates that one extra time. The stock market drove off a cliff. And even back then, the Fed said, and many big investment houses, Goldman Sachs, Merrill Lynch, the Fed's going to raise rates 4 times in 2019. Well, the bond market rolled over. The stock market was rolling over. Yields were rolling over. Almost the same movie's playing out today. And back in 2018-19, they actually cut rates in July. You can see they actually started cutting rates. So this is the same type of movie. I mean, we've gone up so much. We think they've gone too far, and they're going to have to pivot. And the market's screaming at them right now. But right now, the good news is that long-term rates have peaked. Now we have to worry about how much unemployment we get, because remember, the Fed wants to quote unquote create unemployment. So as we go into next week, some of the things that we're thinking about, we have a lot of reports. The Fed's favored gauge of inflation next Friday, right? So if that comes in high, that could unnerve the market. We have GDP, we have durable goods. We have a lot of reports next week. So be on guard. Hope this finds you well, and we'll talk to you soon. Bye for now.